do this. Then, good morning, everyone. This is our 30-day challenge. Thank God it's Friday, my friend. They came out with this 30-day challenge of continuous workout. Let's see. I never done this for a long time. I usually just go and usually it's 21 days, but now we're trying to get back in shape and have more accountability on our own body. So 30 days. Because they said whenever you exercise is a natural therapy for yourself. I usually do it in the morning, not in between or after, because there are just so many things. There are just so many things can happen in during the day that it gets in the way of working out. So it's just so hard to engage and focus when working out after lunch or even after 5 p.m. because it's a happy hour. Because whenever you exercise, it's not just the physical need to engage, but also your mind, your body, your soul, in able to see the result that you want. Because if your mind is not there, you might not be able to increase your weights. You don't even feel it. And I know it's not a one size fits all. You have to check what works for you on your lifestyle. Today is very promising. Hello, Dallas. It's rise and shine. Now I just have to make adjustment in my morning routine. I have to wake up maybe earlier, a little early in the morning. They said that when I used to be in the Philippines, I have this neighbor. He used to be a military. Used to work for the veteran. He always wake up somewhere. That time he's somewhere 50 years old. He always up around 4 in the morning, and then he did his routine. He does his exercise before even the sunrise. I should have. But then now, I'm really inspired by him to wake up in the morning. But then again, after that, you're ready for the day. I usually do the PAME method. You need to have, and you can do your own. This is how my routine starts in the morning. PAME. P is for prayer, A is for affirmation, M is meditation, A is exercise. So basically, I have to do my prayer, then affirmation. I need to write affirmation less than 5 minutes or even 10 minutes. I do have this app that throws affirmation, and then meditation for another 5 minutes. I cannot do meditation more than 10 minutes because I can fall asleep. My mind is traveling or drifting somewhere. And then the last thing is exercise. So PAME. That's always. But the, moving on, we're talking about the what will be how to prepare and secure the future of your business. Again, we've been discussing this. There are two things you always need to do: check your financials every quarter. Whether whatever stage of business you are, you need to know your numbers. It doesn't matter whether you have an accountant, you have a bookkeeper. You're the one that should be primarily responsible on checking all your income and expenses. And this is what we've been talking about, because you cannot see the target if you don't see it regularly. You cannot hit the target that you cannot see. So that is the quote right there. That's why quarterly visit on your profit and loss expenses, checking them, looking how much income you're making and then how much expenses, and then how would you be able to cut those expenses down, because it's not about what you're making. It's again, it is the money that you're saving and investing. The business should be had this equation: income minus your savings and investment equals expenses, not the other way around, not like income minus expenses and the remaining would be savings and investment. Because number one that you have to invest is to yourself. Whenever you're doing your business, should be capable enough to pay for your bills. So if you're making 2.3 million dollars and then you still have what, $300,000 of income, you need to make sure the taxable income, you need to strategize how you can cut those. First 1 2 years, it's okay. That's a business life cycle. First 2 years could be just a startup stage where you don't make so much money. You can be in a loss. That, but you have to aim on the third and fourth year that you are already have net profit, which means if you're making 2.3 million, at least you have 15% of that 2.3 million. So 15% of the 2.3 is the ideal for me. It's still the flooring, which means you're still not that profitable. You need to be somewhere 33%. So you can say that your business is profitable. That it has this room that your money is growing, and that would make sense. Now on the third and fourth, you, like what I said, you need to have a net profit, and then because the money that you're taking every now and then, you have to use it to your investment, which can happen between fifth to sixth year of the business. There's a rapid growth in the business, that there might be more and more customers, but you don't have enough operations, you don't have enough people, process, you don't have so much in you cannot supply the demand. So that's when there's a rapid growth of the business. This is where the expansion begins. Either you internally expand, where you hire more people, you get more manager, and you start to delegate and elevate. You're going to have your own management team in terms of that, but this all revolves to make objective decision based on your financial statements, your profit and loss. Are you capable of funding the from 10 people you needed 23 more people? Are you capable of having would it can it cover the cost? So that's the reason why your prop your numbers will tell you whether you are capable of either loaning money to the bank, or maybe applying for the business line of credit. So it's all about numbers game. And from there, you know that this is what you're saying, that you're taking calculated risk. Okay, there's no, you cannot have your emotion decide for you. That's why also the numbers, what the numbers tell you is, do you have any balance sheet? The balance sheet tells you what's your asset and what are your liabilities. It could be a short term or long term. Current liabilities or short term are less than 12 months. This involves the payroll tax, any sales tax, uh, or monthly payment to your credit card. Those are what you call current liabilities. Long-term liabilities are if you sign up for a payment plan to, let's say you have a coffee shop and you sign up for a long-term payment plan of the furniture, equipment, fixture, uh, your signage, even the POS system could be a long-term liability. So that's why it's, you already know. And then the bank will look on this financial statements, especially now in Dallas area that we were declared as a disaster. the whatever you have, reserve money or asset, it helps you because there are things that can happen to your business beyond your control. So what are you gonna do when disaster happens where your business closed? During COVID situation, we become very in demand in terms of getting this funding because there's so many money available, but all the banks and the government are looking for your year-to-date statement, your tax returns. So that's why if you have this ready, they said the early bird gets the early worm, and it applies. So now we are applying up to 2 million on the disaster loan here in Dallas. Whether your business has been damaged physically, that there's a flood inside the building or your locations, whenever there's a it has been the area or the county has been declared as a disaster, you could always the government is releasing funds. So these are one of the perks of you having uh, updated tax returns and having a business. The government will allow you to apply for the loan. It's usually 3 to 4%. Then although there's a time, it's time sensitive, and anybody that you know here in Dallas County can apply for this loan already to pre-qualify. But if you don't know more about this, just let me know. Book your appointment with us. So we're talking about more on checking your financial statements. So the number one, how will you secure? The number two is you need to consider putting your money. We're talking about savings and investment. There are two reasons why you invest your money. Number one is asset accumulation, and number two, it is an income replacement. So when we say asset accumulation, this comes when either you have the coffee shop, you've been there for 8 years, like Robert Kiyosaki, Rich Dad Poor Dad. Instead of renting, he said invest in real estate. So that's the reason why you already know what you're making and your net profit. Then you have the purchasing power to buy the building instead of leasing it, because when you buy the building it's like an additional asset because you're already leasing it, so you don't have a problem with the tenant. You're capable of paying the monthly rent, so might as well own the building if the owner or the landlord is willing to negotiate of purchasing the building. Then so that is why you're investing your money. Number one, you have a potential asset. And any banks, they give more favor in real estate, in commercial, in whether it's for rental, residential, or business. The number two benefit while you invest your money in real estate, it also helps to deduct or to cut your taxes through the process. Number one that's very popular is the process of depreciation. So it offset any taxable income, like giving to the 2.3 million, and let's say you still have 300,000 of taxable money because only 2 million is your expense, total expenses, the depreciation can actually offset the taxable income of the $300,000. So therefore, you're still the one benefiting it. Then another type of investment you can do, and the good thing also, it's another you can list the other location, the other part of your building, because in any real estate, when you apply for the SBA, this is a SBA for real estate 7A loan, the government allows you to only use 51%. That's what they require. The minimum that you have to use in your property is 51% of the of your business, and then the remaining you can rent it out. See, then the second investment you can consider is invest with your team, with the manpower. You as invest in yourself, because you need to put yourself on payroll. You have bills, whether you're paying 10,000 per month, that's 120,000. Issue yourself a salary, reasonable salary. Remember, the root word is reasonable salary. Okay, you cannot just always be withdrawing money from your bank, and then, because at the end of the day, no, how much money you withdraw, it's a taxable event. You still have to pay taxes on those money. So now, after paying yourself, and you can enroll to your team, either all your managers, you can offer them an insurance, secure them. So basically, you can secure them in a 1 million. Let's just say it's example. So why are you insuring your key players, your managers? It's because when there's a death and sickness that can happen to your employees, your company can get half of the lump sum money, and half of that can received by the family member. So that's just number one. Then that insurance can also act like an executive bonus where your manager hit milestones on in terms of the management and sales. They will receive that bonus. And that's also like a capability of an index universal life. I'm talking about IUL. Then lastly, the buy sell agreement. This can the index universal life can also be used to buy out the partner, buy out or sell the business. Turn right onto Frankfurt Road. So that's why a lot of when we say IUL, this is not just an investment. These are more protection, asset protection. That's why that the second will kick in on the benefit of investment is asset protection. Aside from asset accumulation, and could be protecting your asset. Because to be honest, now your number one asset in any business would be your team. Either you are in a product based, on top of your product, you also have your people. You take care of your people, and they will take care of your business. Because a lot employees, they don't stay with you because just the salary. They also stay with you because of the leadership that you demonstrated, how you made them feel, and also what are the benefits they can get. Do they have health insurance? Do they have uh, investment? Can they participate? Can they have profit share on your company? So that kind of sense of ownership in a long-term perspective will help you, because it's more expensive to retain to it's so expensive to hire new people rather to retain the new one. Okay, and then the other people, they invest in other thing that where you can put your money when you have a company would be your 401k, annuities, uh, IRAs, individual retirement accounts. These are more, again, an income replacement where you can get those money when you retire after 59 and a half to minimize the impact of taxation, because this has a potential, especially annuity, that it can guarantee the principal. You don't lose the principal. If you put 100,000 there, the worst thing scenario, you still have the 100,000, but you just have to coordinate this kind of information to your financial planner. And then your employee can also open, you yourself, even you not employed by somebody in your company, can open a 401k for you. They call it solo 401k. So those are the other things, so many tourists that you can make the most. The thing is, if you're only talking to a tax preparer, it's something that very limited. You're only getting 10% of the total benefit of having a business, because our company, we focus more. First, there are four areas on the business we focus on. Your business structure, it's in setting it correctly. We need to see what are your S corporation, S corporation, C corporation. Are you capable of distributing shares, stocks? Can you do initial public offering? So if you're not if you're not a corporation, that you are limited. Then number two, we also check your record keeping, the total expenses. This, because these are the blueprint. Are you capable of hiring more people? Are you are you making business? Are you working on your business, or the business is working for you? Right? When we say you cannot be an entrepreneur if you cannot even leave, because you're trying to cover all the costs but not hiring. The number three is the tax credits. We are more tax credits specialists. We focus on what are the available, because tax credits are meant to offset your taxable income. All right, I won't be able to finish. I'm here